Loads of people ask me what are tuition fees, what does tuition fees cover? Tuition fees are the cost of being taught and assessed. So you know, you go to your tutorials, your lectures, if you've got lab work, all those things, and the exams, the associated exams at the end of it. In some cases it will also include things like maybe a field trip or your lab coats, and it will vary according to which course you're on. But we've got a policy here at JMU where there are no hidden course costs, so we won't spring any nasty surprises on you once you've arrived. Our tuition fee loan is the loan that you can borrow from the government to cover the cost of your tuition fees. That sounds very simple, but obviously it's got the word loan in the title, which that means at some point you will have to pay that money back. But you can borrow up to, if you're personally eligible, you can borrow up to the maximum of your tuition fees. So for example, at JMU, we would charge you £9,000 a year for our course, and you could have a loan associated with that up to a maximum of 9,000. If by any chance you think, oh, I don't want to borrow 9,000, I've got £1,000 I've saved, then you can just borrow £8,000 if that's what you want to do. There's no obligation to take the whole loan out if you've got savings, or maybe, you know, you've got Great Aunt Bessie said she'd give you a little bit of money towards your fees, then that's fine. You start paying the money back the April after you graduate or leave. So if you backtrack a little bit, before they give you the money, lend you the money, before they lend you the money, they check your national insurance number. And then the April after you graduate or leave, your national insurance number will be flagged by the Inland Revenue, HMRC. And if you're earning over the threshold, which at the moment is £21,000 in England, different thresholds for the 4 nations, unfortunately, to make it more complicated, then you will start paying the money back. Your employer will take it out your salary, just like your tax and your national insurance, 9% of everything over £21,000 if you're from England. Lots of people ask about whether taking out a student loan will have an impact on my ability to maybe get a mortgage in the future. You know, car loan, whatever, about your credit in general, because obviously that's a very important thing. Your credit file is very important, and it's a yes and no answer. It's not straightforward, unfortunately. When mortgage companies, for example, check whether or not they're going to lend you any money, they will look at things like how much your monthly student loan deductions are. They won't look at how much you've borrowed in total. That's not really relevant. It's about affordability. If you look at responsible lending, the mortgage company should be looking at what your income is, but also what your financial commitments are. You might have a car loan, that might be costing you more a month. Well, it will probably be costing you more a month than your student loan. So they should look at what your financial commitments are, as opposed to how much student loan you owe in total. That's not really relevant.